So, hi, good evening, guys. This is Manil this side. I hope you are studying well and preparing well for your exams. There is hardly 5 6 days left now. I hope you are revising it fast. Don't take it slow. Just keep going. Don't stop, okay? Don't get stuck with any chapters in any subjects. Part 2 of the RTP discussions. I'll be doing Partnership Act in this video. Partnership Act 1932. So, let's get into it. Now, so question number 10. So question number 10, I'll tell you, as I said in the first video, I'll tell you the gist of the question and I'll tell you the important key points in the answer which you have to write in your exams, for which they will allot you marks. And then now in this question number 10, what happened is there are three partners, Mohan, Sohan, Rohan. Okay, these three partners of a firm, they admit Bohan as a nominal partner. Okay, is the nominal partner. I hope you have studied the Partnership Act and know what nominal partner is. Anyways, we'll discuss in this question the nominal partner as well. So they'll appoint Bohan as nominal partner. So what happens is the creditor of the firm, current, he files a suit against the Bohan, for the recovery of his debts. But Bowen says that he is not responsible as he is only a nominal partner. So this is the question. And what they've asked in the question, you should always read what is the requirement of the question. What is the requirement of the question? You should always check. In this question, the important points are, the question you should be able to find out what are the important points, keywords in the question which are suggesting what is there in the question. Okay, this is easy question, I know, but I am telling you like how to find the key points in the question. In this question, Bowen is nominal partner. This is important part. And what is that? One more thing is not entitled to share the profits of the firm. And next, creditor current filed suit against Bowen for recovery of the debt. And then Bowen denied for the same as he is just a nominal partner and is not liable for the debts. That's what he said. So, and current should claim his dues from the other partner. That's what the Bowen said. Now, in this question, what they've asked you is requirement is whether Bowen is liable for the dues of the current against the firm, and in case second party is current has filed the suit against the firm, whether Bowen would be liable. The answer for this will be nominal. See, first of all, nominal partner. Nominal means is name only partner. No, is only name only. That is for namesake only. And similar to minor. See, it is similar to a little bit similar to minor. How it is similar to minor? So nominal partner is just partner for namesake, and he does not share the profits of the firm, and he is liable for the acts of the firm. In case of minor, what did I tell you? He is not competent to be a partner of the firm, and he can be admitted to the partnership with the consent of all the partners, only for the benefits of the firm. He can take the benefits of the firm, but he cannot be a partner. He is not competent to be a partner. It's similar to minor. That's how you can correlate the concepts, and you can understand, you can retain the concepts by correlating the two topics. Okay, this is how I used to study. This is how you should also study, because by able to remember two things, both what it says in the minor as well as what it says in nominal partner. Now coming back to this, so nominal means name only, and is not sharing any profits, and is liable only for the acts of the firm. Is liable for the acts of the firm. And next is nominal partner. No, when he retires, he is not required to give notice. He is not required to give notice on retirement. And next, and the firm cannot be dissolved on the basis that he is gone insane. The insanity of the partners, as you all know, insanity of the other partners or main partners will lead to dissolution of the firm. You would have read. But in case of the insanity of the nominal partner, the firm will not be dissolved. So that is, these are the provisions. What I am telling you right now is the provisions. Now apply these provisions to this case. Whether Bowen is liable for the dues of the firm? Yes, because he cannot share the profits of the firm, but he is liable for the acts of the firm. Now, in case 2, Karan has filed the suit against the firm, whether Bowen would be liable. Same as similar to case 1. Has filed with Bowen or with the firm. He is representing the firm only, no. So In case he filed suit against the firm, whether Bowen would be liable? Yes, he would be liable for the acts. Similar to case 1, you can write. Now, coming to question number 11. Now, what the question says, there are three partners ABC, and the firm decides to purchase a machinery. But before they purchase the machinery, partner C died. So, thereafter, the A and B become insolvent and partnership firm is dissolved. So, now whether the estate of the C will be liable for the acts of the firm. Okay. Now, coming to the important points, you have to write nominal partner is partner only in name, and person's name is used as if he were a partner of the firm, but actually is not. Is not entitled to share of profit, but is liable for all the acts of the firm as if he were a real partner. And nominal partner is not required to give. Is nominal partner must give a public notice of his retirement. He must give a public notice. He must give a public notice. Sorry, if I said he is not supposed to give, he must give the public notice of his retirement, and his insanity is not a ground for dissolving the firm. He must give his public notice at the time of his retirement. This is the case you have to tell, and the answer for the 2 points. What are the answers? The first you have to tell Bone is nominal partner, even if he is not entitled to share of profit, he is liable for the acts of the firm. So as if he were a real partner, therefore he is liable. He is liable to current like the other partners, and same in case answer would remain same. Next, coming to question number 11. Here the liability of the partner in case of the death. You have to write, and section 35, if you can remember it, you can mention section 35. But if you don't remember section, don't quote a wrong section, because for wrong sections the marks will can sometimes can get cut. In intern final they'll cut the marks if you write the wrong sections, but in foundation I don't know, but it's better to be safe than to be sorry. So don't quote a wrong question. Write section 35 if you can remember. Liability of the partner in case of death. And the estate of the deceased partner is not liable for any act of the firm done after his death. The estate of the deceased partner, as I said, is not liable for the acts of the firm after his death. And the estate of the deceased, at this point, these words you should write as it is given. Absolved from the liability for future obligations of the firm. So the estate of the deceased partner is absolved from liability for the future obligations of the firm. Then it is not necessary to give any notice either to the public or to the persons having dealings with the firm. As I said, he is not required to give public notice, or to a persons who are dealing with the firm. To those people also is not required to give any notice after his death. Then he means his representatives. No, it's not like he will come and give notice. Anyways, now coming, this is case. They have explained the case. What is there in the case? They have given it here. Then coming to conclusion, this is the conclusion part. You have to write, the estate of the sea would not be liable for the dues of the LMN and company. 12. Question 12, what happens is there are three friends. Okay. They decide to form a partnership and to do trade in a particular chemical. I'll mark in the question what is the important point. Here, what are the important points? Here, there is no important point. Important point is only this thing. Before A and B purchase the machine, C died. So whether his estate would be liable? No, it will not be liable. You have to mention section 35. And in this case, there are three friends. Okay, they decide to form a partnership firm and trade in a particular type of chemical. After 3 years of partnership, a law was passed. This is important. A law was passed which banned the trading of such chemicals. So when they found the partnership firm, that time it was not banned. When after 3 years, the law was passed by the government which banned the usage of such chemicals. So now the business became illegal. Before it was illegal, now it became illegal. As per section 41, compulsory dissolution of the partnership firm will happen. And you have to write the answer as given in the suggested answer, as given in the material. Same thing which they have given here. So whether the requirement of the question is whether they can continue the partnership or the partnership firm will get dissolved. So the answer is yes, the partnership firm will get dissolved because it became illegal. But the important two lines which the students will tend to forget, for that they can cut the marks. I'm telling you, compulsory dissolution of the firm will happen as per section 41. If you can remember, these two sentences is the complete two sentences are very important. A firm is compulsorily dissolved by happening of any event which makes it unlawful for the business of the firm to be carried on, or for the partners to carry it on in partnership. So what does it say? A firm is compulsorily dissolved by the happening of any event which makes it unlawful for the business of the firm to be carried on, or for the partners to carry on the partnership business. And they have mentioned the given what is there in the case. They have given in the instant case, and they have said the firm became the business of the firm became unlawful, so the firm will have to be compulsorily dissolved as per section 41. So that is question number 12. Now coming to question number 13, I have already discussed the question number 13 in LLP, my video. Go and see the LLP Amendment Act 2008 video. In that video, I have already explained what is there in the LLP Act, and I have also told, I have marked the important key points which are important from the exam point of view in the given in the RTP. The LLP Act amendment is LLP Amendment Act is it is been given in your RTP. So which I have already explained the important key points which are responsible from the exam point of view. You should see that video and you should go, because it can come in your exams, and don't tell later on that I didn't study, I couldn't tell you quickly. And what they've asked is the procedure for maintenance of the books of accounts. Procedure for maintenance of the books of accounts, that's what they've asked in this one. Procedure for maintenance of books of accounts of the records and audit of the LLP and Act 2008. The new procedure you have to write. The new procedure means which they given in RTP. It is changed. Yes, it is changed. The procedure that only you have to write. This question can come in your exams this time. So see the video properly and understand it now. So what does it say? As per section 34, section 34 of the LLP Act 2008, section 34. If you can remember, it's fine. Otherwise, it's okay. Okay, don't quote wrong sections. Section 34 of the LLP Act 2008. So, proper maintenance of the books of accounts. I'll tell you generally now what is there. Then I'll show you in the suggested answer. You have to write how it is given there. Without all the keywords, at least you should write like how it is given suggested, because otherwise they won't give you marks if you write in your own sentences. I know, because I know. Just trust me and write. Okay. Then I'll tell you now. What is the procedure for maintenance of books of account as per section 34 of the LLP Act? First one is they have to maintain proper books of accounts. It may be in cash or accrual basis, and it should be maintained in double entry system. Okay, and every LLP should prepare, and it should be maintained at the registered office of the LLP. Okay, that is one point. Now coming to point two, every LLP should prepare their statement of solvency and accounts. You know this, they have to prepare the statement of solvency. But when they should prepare? Within 6 months from the end of the financial year, within 6 months, they have to prepare the statement of solvency and accounts. Okay, they have to prepare the statement, and from the end of the financial year. Then important point, another important point I'll tell you right now itself. They have to file it within the prescribed time with the registrar. What is the prescribed time? Within 30 days from the expiry of the 6 months from the end of the financial year, which you prepare the statement of solvency, that you will file within 30 days to the registrar. So to simplify it for you, what I'm telling you is we will prepare the statement of solvency and accounts now within 6 months from the end of the financial year. After the expiry of that 6 months, next within 30 days, you will file the this one. What? To register the statement of solvency and accounts. Okay, understood. Now coming to point number three. Point number three, they have to get their books of accounts audited as accordance with the rules prescribed. That is point number three. So what you should write as well for this question number 13. I forgot to mark the important point. I've already discussed in that video. You can just check that video. There is nothing same. See, the maintenance of the books of accounts as per section 34 of the LLP Act maintains as proper books of accounts showing the statement of showing the affairs of the company on cash basis or accrual basis, like I said, in double entry system of accounting, and shall maintain the same at the registered office of the company of the LLP firm. Now, and also every LLP, stressing every LLP within a period of 6 months from the end of each financial year, they have to prepare statement of account solvency, statement of solvency and account. So same statement of account and solvency. They have to prepare as prescribed. Okay, as prescribed, the statement shall be signed. This is important point I forgot to tell. It should be signed by the designated partners of the LLP. It should be signed by the designated partners of the LLP. This is very important key point. If you miss this point, they might cut the mark. I'm telling you again, this statement should be signed by the designated partners. How many designated partners are there in the LLP? I've discussed that it in the we discussed that in the video. You should go and check it out the video of the LLP Act Amendment Act to know how many designated partners is there in the LLP. Yes, it has changed. There are two designated partners are there in the LLP. Go and check out that video. Every LLP shall file within prescribed time a statement of solvency. What is this prescribed time? Within 30 days from the end of the 6 months, from the end of the financial year, which you prepare a statement of solvency and prepared with the registrar every year in such form and manner and accompanied with the fees as may be prescribed. And such accounts of the LLP shall be attained according to the rules. As I said, this point you might miss out. If you miss out, they might cut the marks. I'm not responsible if they cut the marks because I'm telling you right now, you have to write this point just because they are mentioned as per the rules, as per this. If you skip the point, they'll also skip the marks. I'm telling you. Then don't blame the evaluator for that. Okay. Now that's all for the Partnership Act. Now I'll make another video for Companies Act. Do check out that video as well because Companies Act is very important from the exam point of view. It will cover huge marks and it is very scoring and the question might come from Companies Act as well from that. Don't miss the video and yes, all the best and study well and